Dan Celia.
All these people that are retired now with nobody else coming into the workforce in order to put into Social Security, that means we're in even bigger trouble in entitlement to Social Security than we thought we were.
I sure appreciate you, sir.
Your personal economy.
We have put a lot of money aside. It's just sitting in banks. We're going toward retirement in about 3-4 years. Should we start thinking about going back into the stock market?
Not now. The vast majority of the gains of the market in 2014 are going to come from dividends.
Financial issues that you need to know.
We have had incredibly high unemployment for a very long time. We have had a very high poverty rate for a very long time. All those things continue to increase. Things can't go up anymore.
Aligning reality with truth.
The Iraqi dinars. Is that good, bad, indifferent?
The theory being is the government's going to get their act together. When they get their act together, they're going to issue new currency. Isn't going to happen.
Now, here's your host, Dan Celia.
Welcome back. Financial Issues here on American Family Radio Network. Welcome to all of you joining us for the second hour of the program. We sure appreciate it. We've been talking about a number of things. I'm not going to recap everything because it was so frustrating. But I guess one of the main issues that we need to be concerned with is, according to the Senate anyway, would be global warming. Forget about poverty rate and unemployment and all those things, as they pulled an all-nighter last night. Of course, all of you listening in Arkansas, Louisiana, Alaska, we are on a station in Alaska, Hagen, North Carolina, those senators weren't there, of course, because they know this isn't really the right place to be. It's not going to play well with voters. So then why are we doing it? Why are we doing it? If you believe in it, you should have been there. If you don't, then that's fine. But anyway, it's just, I got a little comic relief out of that. The other thing I got comic relief over was Richard Branson, who was critical of all this, global warming deniers. At the same time, according to the numbers, Virgin Airlines, that's his company, emits 7.1 million metric tons of CO2. So he's one of the largest contributors to it, but that doesn't matter. Hey, listen, I don't want to forget this, which I forgot in the first hour. If you live anywhere near Mobile, Alabama, April 7th, we're going to be doing a town hall meeting there in Mobile. And so here's our schedule, because apparently a number of you are planning on coming and having registered, and that's an issue for us because we need to know what size room to increase to or to get or whatever we need to do. So if you live in the Mobile, Alabama area and you plan on coming out the evening of April 7th, would you please, it doesn't cost anything. You can bring a busload of people if you want, but we need you to register, and we sure would appreciate it. I would appreciate it if you would do that. So if you can go to afafoundation.net, and register. You can go to afr.net and register. You can go to financialissues.org and register. But please register so we know where we are on that. And that's April 7th for Mobile, Alabama. Then April 28th, we're going to be in Columbus, Ohio. So we need you to register if you're coming the end of April to Columbus, Ohio. And then on May 13th, we're going to be in Muskegon, Michigan, Devin Patrick's home state. And then we're going to be in Lafayette, Indiana on May 15th. So please register. It's really, really important if you're going to show up, if you're going to come, if you're going to bring a busload of people, small group, church group, whatever it might be, make sure you register. I don't have the details as to where they are. I don't even know. All I know is I got to show up at these times and this date somewhere, so I'm going to have to figure out where they are. But we sure would love you to be there. It is a great time. We're going to have a lot of fun. We've got a lot of things to talk about. We're going to take your questions. It is a great time, and it's particularly good for me because I get to meet so many of you, and I love that. I love meeting the listeners, and it gives me a very rare perspective as a talk show guy, because I'm out there and I get to meet the people that are listening, and it gives me a real sense of the heartbeat of our listeners. And I love that. I sure appreciate it. So I look forward to it. So next one, Mobile, Alabama, April 7th. April 7th in Mobile, Alabama. So I look forward to that. I hope you'll register. Go to afr.net. Click on the Faith, Family, and Finance Town Hall Meeting button, and you'll see a screen come up for you to register. And just tell us how many people you're bringing. That's all that matters, and we sure would appreciate it. 866-300-9298. We're going to get back to the phones. All the indices in negative territory. They were negative yesterday, still in negative territory. I believe that we're going to start focusing and put a little bit more attention, I hope, on the Ukraine and the Russia situation. That is not getting any better. If anything, it's heating up a little bit. So we're going to have to watch that very, very carefully. Will impact the markets. So we'll watch that and keep that in focus. 866-300-9298. Let me go to Elizabeth. Elizabeth calling us from Georgia. Hi, Elizabeth.
Hi, I have a couple of questions. One is more a personal question, and then I have a question about defunding Obamacare.
Okay.
But for myself, I have a couple of silver dollars that my grandpapa had given me. I've had them at least 45 years, which makes them back to 1967.
Okay.
One of them, I can't remember. It was maybe around 40 or 50 years old. Mm-hmm. But one of them at the time, I remember back then that it was close to 100 years old. Mm-hmm. And I've never considered giving any thought to selling them because they're much more precious to me just as a gift. Mm-hmm. But now I'm at the place, I'm up in my 50s, not in the best of health, and I'm thinking, like, I don't want to die and just have these coins here, and I assume it's just going to be when I die, because there's no family left, that, someone will just come in and, pay nothing for everything in my home and make tons of money on it.
Sure.
But I have no idea. Are there a couple places that you could tell me, excuse me, that I could sell them, and any idea of what the fees would be like or anything about that? I don't know anything about it whatsoever.
So here's what I would do, Elizabeth. You need to go to the web page and search it. So put in 1967 silver dollar in this search, and it'll come up with a number of places that will click on, that'll tell you on the website how much it's worth, what the value of it is. Now that's going to be, that's not going to be perfectly accurate, but it's going to give you a pretty good idea of what they're worth. So that would be the first thing I do. Now, as far as the fees go, I wouldn't do anything because you only have a few of them. I would find a local coin dealer there in Georgia near you that would be willing to take them. But at least when you go into that local coin dealer, you have a good idea of exactly what they're worth, so that you're not, somebody's not lowballing you a price and taking advantage of you. So I would do that. I would go through that exercise. Again, I'm not saying that I wouldn't sell them online if it's a very reputable company. That would have to be something you'd have to look at. But I certainly would use that to get a good price on what they might be worth. And a lot of their worth on a coin like that is going to be dependent upon their wear, how they look. If they're very worn down, they're not going to be as valuable, obviously, as if they're in very good shape. So all of that's going to weigh into that, because it's not the value of the silver, obviously, alone with a coin like that. It has what's called numismatic value. It has value in that it is an old coin. So there's going to be, you obviously, what silver is worth right now, because we can look at that. It's $21 an ounce or whatever it is. And, you have an idea of what that's worth. But there's going to be value over and above that. It may be, even though it's 1967, there are all classifications of 1967. It could be minted from, whether it's been minted in San Francisco, in Denver, that will weigh on it. Maybe it's a rare minting from somewhere else, all those kinds of things. I'm not an expert, not even close to an expert on any of that. But that's where I would start. I think that makes the most sense.
But so then you don't know of any reputable dealer that you could recommend? Because I'm in a small area. I doubt that I could even sell it here.
Yeah, no, I don't, but I'll tell you, I wouldn't want you, I think you would be better if it's possible. I know you said you weren't in the best of health, so if you could get to Birmingham or Atlanta or somewhere where there may be a reputable dealer, I still think that would be best than paying the fees to mail it to somebody. But I know two reputable dealers that you can contact that may be able to tell you. One is, I'll just give you one, GainesvilleCoins.com, Gainesville as in the city of Gainesville, Florida, GainesvilleCoins.com. You can find their phone number there and call them, and they may be able to help you with someone local to you. They're pretty good people.
Okay, thank you so much. That does give me a starting place.
Okay, good.
My other question is, the House of Representatives has voted, I don't know how many times, to repeal Obamacare, but then that, we do understand it's going nowhere because it's not going to happen in the Senate. But then, I hear all this talk, all these things, and sometimes I can't, remember what was said. But, is it possible for them to actually defund it? I heard someone saying, that, well, they couldn't actually do that because the money was already committed or something, although I'd ask about that. Well, I can write a check, but I can put a stop payment on my check. And is that something that they have done or they've not done because they haven't really wanted to? Or, isn't that a legitimate thing? If they hold the purse strings to all the money, can't House of Representatives just say, no more money for this, you're not getting it?
Yes, they can. They don't have the will to do it, but they certainly can do that. They do hold the purse strings. Now, they have denied, this is the House of Representatives, the Republicans have denied that they can do that, which is wrong. They do have the power to do that. So they can defund any part of it. They just say, well, we've tried to, defund it, and, Harry Reid won't take it up on the Senate floor. We need to, get control of the Senate. Well, I don't know what good that's going to do, because even if you gain control of the Senate, you're going to need a supermajority of the Senate to override the president's veto, because in all likelihood, he's going to veto anything you put up there. You're going to now have to bring it back to the floor and have a supermajority in order to override that veto. I don't know if that's going to be the answer either. So, Ted Cruz, I didn't read the whole piece, but Ted Cruz came out yesterday and said, we will see Obamacare appealed by 2017. So, he's assuming that conservatives are going to win the White House and control the Senate and the House of Representatives. Listen, I think this is this whole program is on the verge of imploding on its own. And I think that if the Democrats, which I think they will, are going to lose the Senate, if they do that in November, that's why these November elections are so important. They may think Obamacare is the greatest thing since sliced bread, but there's one thing they think is greater, and that's them keeping their job. They care about that more than anything else. And you'll see a turn in the tide in a heartbeat. Depends on what happens in 2014 election. So we're going to have to sit back and continue to be at the mercy of the politicians, but we're not at the mercy of who we hire as the politician, at least leading up to 2014, and who we fire. And so hopefully we'll take charge of that. So that's kind of where we are, but you're right in your assumption that we do have, the House of Representatives has the power to do that. The power has not been the question. House of Representatives has the power to impeach this president for breaking the law and impeaching Eric Holder for breaking the law. And we've not exercised that power either. So it's a matter of a will to do what is right. 866-300-9298. We'll be right back. Hi, this is Dan Celia from Financial Issues. You know, I don't talk enough about estate planning, but let me just remind all of you, if you've got a complex situation, maybe you're about to receive an inheritance, maybe you have appreciated assets, homes or stocks or other valuable assets, you want to try to get the best tax situation you can, make sure you do an estate plan. Would you call the AFA Foundation? 800-326-4543, extension 345. Tell them that you feel you need to sit with Dan or someone else to go through your plan. We're happy to do it. Don't get bogged down in all the details and options. Talk to us first to see how we can help sort it out for you. Call the AFA Foundation, 800-326-4543, extension 345. Call today. The opening statement in the Constitution of the United States says this, that we, the people of the United States, in order to form a more perfect union, establish justice, ensure domestic tranquility, provide for the common defense, promote the general welfare, and secure the blessings of liberty. I don't know what part of that we don't get anymore. That was written by men who cared about this country deeply.
Financial Issues with Dan Celia.
Welcome back, 866-300-9298. If you want to weigh in, let's go back to the phones. Let me go to Jeff. Jeff's calling us from Mississippi. Hey, Jeff.
Hey there, how you doing?
I'm doing okay.
I'm continuing to try to become an irrational investor and become a smarter one, and I appreciate everything you do there.
Well, it's a hard thing to shake.
Right.
But yeah, I know you can do it. Keep working.
I got two questions.
Okay.
One, and kind of, and I'll just give you a scenario, and of course it's not actual real, but say you have like IP, an international paper, on your buy list at say $45, and I mean I know you're looking at fundamentals and everything,
sure,
and it may move up, but say 8 months later it's back down to 43.
Okay.
And it's no longer on your buy list. If I have new money coming in, would that be a good position to add to or add to something that's actually on your list?
No, I think it's a good idea to add to it.
Okay.
So if you got some new money, assuming though, here's the thing, Jeff, assuming that you've got some other positions.
Right, you're allocated.
Right. So assuming that, and you're confident, you're happy, you got some good positions, you don't necessarily need or want any more, which is great. Then yes, I would, especially the example you gave of IP, international paper. I would like to see you add to that, and lower that share price, that average. And frankly, if you added to it at, using your scenario, if you added to it at 43, and 6 months later it goes to 40, do you add to it again? Yeah, I would. Yeah, definitely.
All right. And my other question is, can you give me maybe some reasons why you think El Paso pipeline is at its 52-week low? And do you see any near future thing of moving upward on it? That's just one of the positions that I have right now.
Yeah.
Of course, I'm in a little bit higher, and I guess that's kind of what I'm thinking about, maybe adding to that position, unless there's a reason not to at this time.
No, I can't say that there would be a reason not to. El Paso is a company that has driven me crazy for about 10 years. They went through some financial issues. They went through a lot of financial issues. They went through some buyouts and sells of different components. And I really felt like last year they got themselves squared away. Not last year, I would say the year before last, 2012, really kind of got their act together. There is, I know the reasons, at least from my perspective, And from the reasons I know, from a fundamental perspective, would I buy if I already owned here? Yeah, I probably would. I think that but I don't feel like they're going to be, I think they're going to be volatile for the rest of the year. But I wouldn't have a problem buying here. Could they go lower? Yeah, I think they probably could. But if you own the position and you want to add to it, I don't think I'd have an issue with it. I mean, I would probably do it. I could see them coming back on my buy list this year, based on the fact that they're at close to a 52-week low right now. I mean, I know they had an incredible, that incredible run, but when you look at their cost and what they're doing, I mean, you got to go out 5 years to get profitable with them. They're paying an 8.75 dividend. Their valuations are good. I don't see them giving up on the dividend anytime soon. But fundamentally, are they strong enough to make my buy list? Then no, probably not strong enough to make my buy list. But, I just am convinced that I know there's competition that's hurt them in the transportation sector of natural gas, and that is weighing on them. But I think there's so much room in that transportation sector, pipeline sector of natural gas, that I think they're going to be fine. And when you look at El Paso, they've been doing it as long as anybody out there. And I just think, they've spent an enormous amount of money. So cash flow has hurt them a little bit. But they've spent a lot of money. They're doing expansions. They're doing upgrades. And I think in the long run, again, they're going to be fine. So I like them. I think that I would add to them, even though they're just a hold right now.
All right. I appreciate it.
Okay. Thanks, Jeff. 866-300-9298, 866-300-9298. Let me go to Richard. Richard calling us from Arkansas. Hey, Richard.
Yes, sir. Thanks for taking my call.
Sure thing.
I want to touch just for a moment on cap and trade.
Okay.
It's my understanding, I believe it was a year or 2 years ago, where Obama said that once that was implemented, that it could bring utility rates double or triple the amounts.
Mm-hmm.
If that were to happen, and if this were to get approved and that sort of thing were to happen, a lot of Americans today are living paycheck to paycheck, those that are working. And we've got a lot of people that's unemployed.
Mm-hmm.
If that were to happen, there wouldn't be even enough donations from the private sector to make sure people's heat could be operational in the wintertime or their air conditioners in the summertime.
Mm-hmm.
So literally, you're talking of possibly hundreds of thousands, if not millions of people dying.
Yeah.
And I don't know if anybody's ever thought of looked at this aspect on this cap and trade deal.
Well, let me just say, Richard, it's a great comment. Let me just say, because you haven't heard it from me, apparently. Anyway, you haven't heard it. I've commented on this several times, and when it was introduced, cap and trade bill was introduced on the floor of the House. I said that it was, and I still believe that it is, the most dangerous piece of legislation that has ever hit the floor of the House of Representatives. I said that, and I still believe it was far, far worse than Obamacare. I still believe it is the worst and the scariest piece of legislation. I said at the time, now it didn't pass, but I said at the time that it was going to be a power grab and a social control aspect for this administration, for the government, to the likes that we haven't seen since, communist China. I believe that it would have given the government the power to control every aspect of our life and what we do. And you say, well, that's ridiculous. It was a carbon bill, was a, global warming bill, this, that, and the other thing. It would have, no. It would have given the government control over every small business, every homeowner that heated with fossil fuel. It would have given them total control over the baker that can't help the fact that it takes a 400-degree oven to bake a loaf of bread or a cake. That is going to be a dramatic user of carbons. It would have given the government total control over his business. And that's just a small example. And you can extrapolate that through mid-sized, large corporations. Worst piece of legislation ever. Here's the thing that I want to make a very clear point on. And because you said that if it's ever implemented, with the dangers. First of all, I agree with everything you've said and your assessment of it 100%. I don't know if anybody's thought of the things you brought up. I've thought about it, and I've brought it up, and I've talked about it on more than one occasion. But here's the thing. It has been approved. Here's what happened when it got shot down on the House floor. Now, there were Barney Frank and other legislators that were absolutely sold out and were outraged that this bill wasn't passed. Then one night, it went away immediately. There was never another word said about it. All the radical left-wingers that love this bill never said another word about it. Here's my belief. I don't have any evidence of this. I'm just throwing it out there. Here's my belief. I believe President Obama said, relax, don't worry about it, because I've taken the bill and I've handed it to the EPA. And that's exactly what he did. He handed the cap and trade bill to the EPA. And the EPA, his EPA, can implement that through a series of rules, regulations, and criterias in order for us to do anything. And that's exactly what happened. So it still remains the most dangerous piece of legislation this country has ever seen. Make no mistake about it. But it has been handed to the EPA. And it is another reason why this EPA, this Department of Education, this administration, and other departments, Department of Justice and others, are so dangerous to America. So you are absolutely right. People will die under the rules and regulations of cap and trade. And if they're not dying, they're going to be starving, because people would have to make very hard choices. It would create an incredible amount of unemployment, most of that coming at the hands of small businesses, not necessarily corporations. It would create an enormous amount of wealth within the very 1% that this president seems to despise, because there would probably be a market coming online that would be a trading market for a commodity called carbon credits. And I believe that companies would be trading carbon credits just like they they trade other commodities in one way, shape, or form. So, DuPont is very carbon intensive. I can't think of another industry, but there's probably other industries out there that aren't, that have an enormous amount of credits, and it would create a swapping and a trading environment. So the wealthy, the ones that he despises, would get wealthier from this. The poor would get poorer. The middle class would be hurt. Unemployment would go up. But the government would gain a social control and a power that would be something that we wouldn't be able to fight against. So very, very dangerous. It's interesting to hear you bring it up because it's not in the news and it's not something that we talk enough about. But certainly the EPA has a full handle on it. Trust me. Fortunately, the EPA has been caught up in Keystone Pipeline, in trying to do everything it can to make sure permits don't get reissued on federal land that have been shut down when they shut down the oil industry due to the BP spill, and caught up in those other issues. But, they're going to move on issue by issue. And if you don't think that it is important to make sure that the Senate changes, you're making a huge mistake. If you don't think it's important that 2016 change, the White House, you're making a huge mistake. So we better take control. But these are the kinds of things that we don't hear enough about. We're not talking enough about. We're not bringing it up. I'm guilty of it too. I mean, I don't bring it up as often as I should, but it is a very, very important issue. And I appreciate the fact that the question came up. This is an incredibly important to our unemployment, to our economy, to our discretionary income, on and on and on. 866-300-9298. If you want to weigh in, 866-300-9298. We've got a line open, two lines open, 866-300-9298. We're coming up on a break. When we get back, we're going to get right to the call. So cue your call up, 866-300-9298. All the major indices have turned positive. The Dow's now up 16. So everything has turned positive. Let's see if we broke 100 on oil right now. Let's take a look. No, a little bit closer, 163. We started out the day at about 176. It is moving downward in the right direction. The national average for gasoline has continued to go up. That will likely go up. We are headed into the transformation of the refineries over to summer fuel. It always goes up this time of year. So that is not anything that we should be not expecting. But the problem with that is it is going up on the heels of a 1 month increase of 18 cents a gallon prior to getting into this season. So not a good thing. So if we see the whole Russia-Ukraine thing continue to heat up, we could be staring at $4 a gallon gasoline by June. 866-300-9298. We'll be right back. Hi, this is Dan Celia. It is difficult in these volatile times to think about how am I going to manage my money? Can I manage my money? Do I have to put my trust and faith in someone else and then expect them to be biblically responsible in their management strategies? I think all of you have had those questions and concerns. Well, I can put you at some ease and tell you that if you come alongside Financial Issues and partner with us for $85 a year, I will help you with all those things. We're going to give you stock picks every Monday. I'm going to put you on an alert system that'll tell you when to buy or sell or hold or give you comfort. You'll get asset allocation models, investment strategies. You'll have access to our conference call that we do every month with our partners, all for $85 a year. I guarantee it'll be the best investment you ever make. Go to financialissues.org, financialissues.org to support the ministry. I sure would appreciate it.
The opinions and recommendations expressed by Dan are his own and do not necessarily represent the opinions of this station or any of the show's sponsors. 866-300-9298. You're listening to Financial Issues. I'm Dan Celia. It's great to be here. We're here every day at this time. Listen, I want to remind you, if you live anywhere near Mobile, Alabama, if you live anywhere near Mobile, come on out April 7th. We start at 6:30 for our town hall meeting. I don't know where you can come out to because I don't know where it is. But if you go to the website and register, which we need you to do, if you want to come, you can bring a whole busload of people. We just need a head count. Go to afr.net, click on that Faith, Family, and Finance banner there and register. We really need you to register for Mobile. If you're coming out to Mobile
and you're thinking, well, I'm just going to show up with 20 people, we really need you to register and would really appreciate it. And I am looking forward. We've never been to Mobile. We talked about it. We were going to do one there last year, and we got sidetracked somehow. I don't know what happened, but I said I would come back. We're going to come to Mobile, and we're doing that. So we're looking forward to it, and I sure hope that you can get out to it. I'd love to meet as many of our listeners as I possibly can. It means so much to me. I'm looking forward to it. Mobile, Alabama, April 7th. And we're going to be on April 28th in Columbus, Ohio. Same deal. We need you to register. We were in Columbus a couple years ago. We had a huge crowd. As a matter of fact, I think Columbus was one of the town hall meetings where we had some people standing up and we had to put some chairs in the aisle. We don't want that to happen again. We really need you to register in Columbus, Ohio. So we're looking forward to that on April 28th. Then we're in Muskegon, Michigan on May 13th. And on May 15th, we're going to be in Lafayette, Indiana. So make sure you register. Go to afr.net and click on that Faith, Family, and Finance Town Hall meeting. You can go to financialissues.org on our website here at the ministry, financialissues.org, and register as well. Let me go to Don. Don's calling us from Tennessee. Hi, Don.
Hello. Thank you for taking my call.
Sure thing, Don.
Got a question.
Okay.
Been successful in my life. I'm 77 years old, and I have 3 financial advisors.
Okay.
One don't know what the other one's got or how much they're managing for me.
Okay.
Is that a wise position?
I would say no. I mean, I'm probably being, as a former guy who owned his own trust company, I'll tell you one of the things that frustrated me. Now, I was managing about $800 or $900 million for 22 years. I had a trust company, and one of the things that used to frustrate me was after a couple of years, people would say, "Oh, by the way, I got this money over here, with this other person or doing this other thing."
Right.
And the reason it frustrated me was because it messed up my whole asset allocation model for them. Because, there was probably duplications in positions. There were duplication in sectors of the markets. And it's really for a really good manager, it's very frustrating. I would have a cash position of, back then it was when you had cash positions of 5 and 10%. You'd have a 10% cash position, and then you find out, I forgot to tell you, I've got all this money in CDs and I've got all these savings bonds and so on and so forth. And that money could have been working in the market, and it was, those kinds of things. So no, I don't think it's ever a good idea, only because, so you've got 3 separate, I'm just going to assume for a moment that they're all good. So they're all trying to diversify, and they're all, doing a good job. But unfortunately, you're probably got duplication. So, you could put yourself at risk of getting hurt a little bit harder, because a particular sector that you may have 30% in, because all 3 of them have 10% each, that you should only have 10% in, could tank, and you're going to get hurt a little bit more. So I would really rethink that. I would look at track records, who you trust the most, which one you feel has really, been good to you over the years, and that would be, I would consolidate and use one.
Okay. Well, one of them is a fee base, which I don't really like. Seems like it's pay more to have the management than I do the one that's not fee-based. And I watch how they do, and one, they're pretty close with each other as far as what they make, but the fee base is less because it takes more to operate it.
Well, so ideally, fee-based is best. because now I don't know if you're using mutual funds or not.
Very well. He's one of them switched that used the fee base. He switched when I started with him. He was all stocks and he was buying and selling. Now he's gone to fee base. I mean, to funds and watching trend lines and that kind of thing. And that kind of bothered me because he went to mutual funds because of the load going in, load getting out.
Right. So that's why the fee base is never now that. So that's I sat on an ethics committee with the SEC for 5 years, and one of the things that drove me crazy was that they allowed that to happen because to me, you're either fee-based or you're not. And if you're taking commissions or what's called a trail commission from mutual funds, then you're double dipping. I don't have a problem. I think everybody has the right to earn a living, and they get their fees, their commissions and such any way they get. I don't have a problem with that. But I do have a problem if you're getting it from, a lot of different sources. So I think if you're going to be fee-based, which fee-based is always better. The reason why fee-based should be better is because the fee-based advisor should have an attitude that it's irrelevant of what they put you in for their own personal good. In other words, they don't need to steer you in the direction of a particular mutual fund or some product that is paying high commissions. It's irrelevant to them because they're getting a fee on everything they manage. So they tend to be, less biased. I mean, they're not going to worry. They're going to put you. I think that they tend to be. At least I would hold myself out. I was strictly fee based, and I never did mutual funds. I only did stocks. But if it made sure it didn't benefit me, it would only benefit me if I put you in international paper stock. It would benefit me a whole lot more if I put you in XYZ mutual fund that was paying me a commission. But I didn't use mutual funds, and it didn't matter what stock I put you in. I put you in what I thought was the best stock to put you in, or stocks to put you in. So theoretically, when you look at history and past performances, fee-based advisors are always a better way to go. But they shouldn't be doing mutual funds that have either front or back end loads and are getting trail commissions. Then if you're going to do that, cut your fee in half or cut it out altogether. But you shouldn't be doing both.
Right. That's exactly what I thought, because I didn't, when he switched from one to the other, there was a reason he switched, I guess it was so he could make more money. And I don't mind him making money, but when I see the balance on the balance sheet not coming up to where it should be, then I think, well, he's collecting it on the other side and then not worrying too much about it. And then it's easier to buy mutual funds and not have to worry about them.
Yeah, it is. It is. I mean, that's a lazy way of doing financial, investment, in my opinion. I mean, it's a lot more work doing analytical work all the time, trying to, pick stocks. Now, I was always a long-term investor, so, my stocks were for the long term, but nevertheless, I was always considering a sell of a position and a buying of another position and trying to stay on my toes. A little bit more actively managing takes a little bit more work. So that's kind of where I am on all that, Don. I hope that helps you, gives you a little bit of insights. Sounds like you're thinking right. I mean, you're on the right track, but, I would consolidate with one of them. Thanks, Don.
The reason that I didn't do that was because I always felt like I didn't want to put all my eggs in one basket, and that one basket go bad, then I got all my eggs.
Yeah, but keep in mind, Don, and that's a good point. You're right about that. But the basket is not the advisor. Okay, the basket are the things that you're putting your money into. So if you're with 3 advisors and they all have IBM stock, you got a lot of eggs in one basket because you have a lot of eggs in one IBM stock. If you're with one advisor who is diversifying, so you can't look at a brokerage firm as a basket whole. Yes, they are your platform and they're doing your trading, but it's about the positions that you're in. So you don't want to have all your eggs in energy, or you don't want to have all your eggs in muni bonds, or you don't want to have all your eggs in consumer discretionary kinds of things. You want to be spread out. So having multiple accounts is not doing that. That is probably contributing more to having more eggs in one basket than it is to have one guy that or woman that knows, all that you have and is diversifying it properly. Does that make sense?
That makes sense.
Okay.
Thank you. That's the first time I ever heard anybody say about the eggs in basket if they all got. Of course, I kind of watch that and make sure that they're. I see that on my statement where I am on my allocations and watch, but they don't do too much of that, but just a little bit.
Yeah.
That's a good thought.
Good. I'm glad that helped. Thanks, Don. Great question. Good stuff. And I know all of that was probably edifying to a lot of other listeners. Let me go to Terry. Terry calling us in Ohio. Hi, Terry.
How you doing, Dan? I appreciate your show.
Thank you.
I got a question. I guess I'm trying to understand how the Obamacare is fair to everybody. I got a situation here where I work full time in a company, and they kicked all the people's wives who have employers who offer benefits all got kicked off the insurance program.
Mm-hmm.
You still there?
Yeah, I'm here. Yep.
Well, they all got kicked off the insurance program because they were offered benefits. Well, my wife works in a small church office. She is offered benefits.
Okay.
But her insurance costs her $600 a month through her employer, and we can't afford that.
Okay.
So when we went to apply on Obamacare, they want to know our whole household income. Now, why is that fair? They want our whole house income. Why should they go by her income? She only makes like $14,000 a year. Why don't they go by her income?
Because if your household can afford more, it's going to disqualify you from some of the less expensive plans. So that's why they want to know that. It's always going to be a household issue. So they want to look and say, well, household income is, $20,000 a year, so therefore just put them on Medicaid. Or they're going to say their household income is $100,000 a year, so therefore that eliminates, 5 plans or 2 plans or whatever, eliminates certain plans. So that's why they do that. Is it fair? No, it's not fair. It's not fair. But that was true in the private sector as well. For instance, my wife and I have 2 separate plans. So my plan that I have through financial issues through my ministry won't cover her, because 6 years ago she went to a cardiologist, so they won't take her. Her plan, which is United Healthcare, mine's Aetna, wouldn't take me because I have sleep apnea. So along with everybody else in the world, so they wouldn't take me. So we ended up with 2 separate plans, and both those plans needed to know our total household income. So they wanted to know. So United Healthcare wanted to know. Aetna wanted to know. They both asked questions about our spouse. Both of them wanted all that information. So this was long before Obamacare came into play. So insurance companies have been working that way for a long time. But you're right, Terry. Listen, nobody years from now is going to accuse Obamacare of being fair. There's nothing fair about it. Not only from a cost standpoint, from an information standpoint, there's nothing fair about it. And that's the only thing we can say that's consistent about Obamacare. So that's not going to change. Good stuff. I appreciate that, Terry, and I hope you're going to come out to Columbus. Terry, I know you've called in before. Maybe you've been to one of the town hall meetings. But we're going to be at Columbus, Ohio on April 28th. Make sure you register, folks. Mobile, Alabama, April 7th. Muskegon, Michigan. Where is that, Devin? I don't know where that is. Muskegon. Where is that? Is that southern Michigan? West. Is it going to be cold? That's all I really want to know. Okay, good. So Muskegon, Michigan on May 13th, and then on May 15th, we're going to be in Lafayette, Indiana. We're looking forward to it. I want to meet as many of you as we possibly can. I always appreciate that. It'll be a great, great time. You won't regret coming. I can promise you that. Even if you've got to drive a couple hours, I promise you it'll be worth it. We're going to have a great time. So I hope to see you there. Go to afr.net and register under the Faith, Family, and Finance Town Hall meeting. I want to thank everybody for being with us. Devin Patrick, our producer, Ann Reed, our doing our production work on the phones, and Emily Halder, who's not here. Randy Lucius filling in for Emily. Folks, remember, all that we have is the Lord's. Let's be found a good and faithful steward.